The 4-step method to high performance trading is about bulletproofing your daily routines, your executions, your skill set, your mindset, and your beliefs to execute your edge trading in live time. Building your discipline and confidence in live time is how you will be able to produce those results consistently over the long term. The 7-step daily routine for high performance traders is about developing your process, your habits, your mindset, your beliefs, your skill set to master the markets. Bulletproof yourself for success and consistency over the long term. The links are in the description box below. Let's get started. G'day traders, Stacey Burke from Stacey Burke Trading. A very short technical video, but also a mindset reset. First trading day of a new month. We'll be going a bit more in depth into that in a future video, but today I just want to focus on simplicity, the same repeating setups again and again and again. There are only 2 setups, and that's buying low or selling high. 2 blue lines level to level in the session that you're trading. So we've talked about signal days, signals on the day, but also the 3 things that every single market does. All markets do the same 3 things. They break out, they pull back, and they continue to trend. They break out, they fail, and they reverse, or they stay in a higher time frame trading range, a consolidation, but we can still have selling high or buying low opportunities when they present. I want traders to read this bottom line though. Keep it simple. Keep it simple, repeatable, and scalable. Looking for the same setups. There are only 2. Whether it's pump, coil, and dump coil, and pump, or trap and shift, buying low or selling high. Dump, coil, and pump, you're buying low in an explosive parabolic setup. Pump, coil, and dump, you're selling high in an explosive parabolic setup. The trap and shift V bottom or A top. Same thing, just over a smaller time frame setup on the day, but a larger time frame dump, coil, and pump, or pump, coil, and dump. Markets only do 3 things. The explosive nature of a trade setup is because they have traders trapped on the wrong side. They're caught chasing the move, the momentum, the candles, and they're missing out on the parabolic explosive trade setup. We keep repeating day after day after day the 10 a.m. club. Now today's a no-brainer because there was 10 a.m. major red news. Now one of the things that I talk about all the time is traders can trade any way they want. But when I say rinse and repeat, I'm talking about the trader, the variable nature of the trader. When I put this slide up, a lot of traders misconstrue this. They're missing out on the bigger picture, the actual trade setup. They're getting caught chasing everything, all the little stuff, the diddling inside. And I repeat over and over and over again, all the setups in the playbook come from the daily time frame. That's what allows an A+, A++, A triple+ trade setup opportunity. I keep repeating this, whether it's in the long direction or the short direction. We have an A+ session nail and bail. Why is it nail and bail? Because we're in a session trade setup. We haven't established possibly a higher time frame opportunity, a weekly level to a weekly level, a daily level to a daily level. We may have a trade that's already in progress from a daily level, and we have the opportunity to capture the low-hanging fruit. What's left in a later session. The train left the station in an earlier session, and we now have the opportunity to participate in a buy low for the low-hanging fruit or a sell high for the low-hanging fruit opportunity, the continuation in the session that we're trading. Now, I'll keep going back to this slide because this is what everything's based on. Every single market, no matter what market you pull up, they all have the same behavior. There are only 3 things that markets can do. Whether or not they're driven by an algorithm, not driven by an algorithm, it's irrelevant. They all do the same 3 things. The problem is that the trader themselves will do all kinds of variable things. They'll look to trade everything all the time, no matter whether there's an edge or not. Sweeps, runs, inversions, imbalances, premiums, discounts, swings, pushes, hunts, minutia, gaps, soups, everything inside, everything on the outside. Catching highs, catching lows, but nothing that's consistent, repeatable, and scalable. Never once have I not said that these inner diddle type situations don't have validity. But what I'm talking about is the consistency of the trader themselves, the rinse and repeat nature of the trader themselves, so that they don't engage in random, impulsive, potentially emotional, self-sabotaging, degenerate gambling type of behavior, which is where most traders come unstuck, and how they will eventually, if they haven't done so yet, in a lot of cases, blow out their trading account, and then they'll start the process again. Why daily signals? Because I'm targeting opportunities on the daily time frame. Multiple days of breakouts, first red day, first green day templates, inside days. Regardless if you're trading one instrument or a basket of instruments, when you boil it down to when the trade is there, if there's an actual setup, it is only ever a buy or sell setup. Which brings us to today. My favorite part of all of this is it has nothing to do with agreeing or disagreeing with me, or believing me or anything else, because it's irrelevant of me. The same things happen over and over and over again because markets only do three things. Traders, however, can do many things. They jump around, they do all kinds of crazy things, and then they say, it doesn't work, let's see you do it. But they don't follow any process. They don't follow any rinse and repeat routine. So we talk about the 10 a.m. club. The 10 a.m. is a new 4-hour rotation. And people misconstrue that and they say, what if it moves at 8 o'clock? Or what if it moves at 9:30? And what if and what about? And we say in the 10 a.m. club, we don't care. We don't do anything unless we find the setup at 10 a.m., regardless of a soup, a gap, a block, a run, a sweep, an imbalance, an inversion, a supply or demand level. Looking for one of two setups. That is all there ever is. There's only one of two setups. A buy setup or a sell setup. Over and over and over and over and over again. Dump, coil, and pump. Pump, coil, and dump. We talk about front side of the week. We talk about back side of the week. Day 1, day 2, day 3. A 3-day setup on day 3, Wednesday. The midpoint range of the week. Friday is the closing range of the week. And Friday's closing price is where everything starts from. Well, let's put this theory to the test. When in fact, it's actually not a theory. It's just description of days. So an inside day, for example, which is what we had on Friday, the closing range of the week, is a day that's high and low are inside of the previous daily range. Friday was an inside day. We have our high of month level. It's the first trading day in a new month. We have the September high of month level in place. New week opens and Monday trades higher and closes in breakout. Now Monday trades higher, and on a Monday we can look for a 3-session setup when we have signals on the day. We talked about this earlier in the week. Signals on the day are when we break out of daily levels. So we have signal days, which can alert us to a high probability candidate. Then we have 3-day setups. Wednesday's day 3, page 31 in the playbook. We have 3-session setups. We can look for a 3-session setup at the beginning of a new week. Monday's day 1 and the opening range. Page 26 in the playbook, the opening range and initial balance. Very important to understand what that means, because now we have a new week. We also have breakout traders in the market from Friday's closing range of the week. Now, a moment ago, I said that everything starts from Friday's closing price. We broke out of Friday's inside day on Monday, the opening range in a new week. The opening range sets the new high and low into the new week. Now, remember what I said about days that break out. We can project that level, and as it happens, right from the beginning on Monday, from Friday's closing price, we have the low of day of Monday, the breakout day. We have that level drawn across. So we have Monday's opening range. That sets the new high and low for the week. We can project that level across. That's the high of week level into a new week. We have breakout traders in the markets. We'll back this up again. This is a 30-minute chart. And we have the inside day on Friday. Now, some traders had Tuesday as an inside day. I had it just touching the low of day level. So that's kind of irrelevant, but we have our breakout traders in the market. We have Monday's low of week level intact. Day 1, day 2, in a high percentage of situations, one of those extremes will tend to hold. We have a breakout on Monday. A breakout of the low of week level on day 3, Wednesday, day 3. There are 2 types of trades on a day 3, Wednesday or Friday, any market. So remember, we're looking at one instrument, but we're using the process. The most important thing is sticking to the process and then going through your basket, whether you have 4 indexes up, whether you have 1 index up, whether you have metals, energies, currencies, or indexes, which instrument is giving me the best setup on the day. We had 3 session setups, and now we have a market that's broken out. Monday, day 1 from the inside day. Thursday was our low of week level, and it's pulling back into the low of the current week level on day 1 of a new month. See, the most important thing is, regardless of what you think, believe, approach the markets, any of those things, markets only do 3 things. So we're just looking for the best setup based on market behavior. The market breaks out the low of week level and reverses. Markets only do 3 things. But the best part is we've got 10 a.m. major red news, and I don't participate in markets before major red news. Even if traders think they can do that, whatever they think is fine, but you could never put any real size into the markets prior to major red news. There could be a wick, there could be a gap, there could be slippage, there could be all kinds of things that traders are willing to gamble on just to catch a move. But we're talking about running our trading business on rinse and repeat setups. And remember, there are only 2 setups. There are only 2 setups. Buying low or selling high. Any instrument. Rinse and repeat over and over and over again. So we have our inside day. We have our breakout on Monday. A day 1 runner. We've used the expression several times, don't counter-trend a day 1 runner. You can catch a move. You've got a session, nail and bail. An A-plus session reversal opportunity on day 1. That market continued to break down, pumping higher into the close, making a higher high on the day on day 2. Master the skill of drawing 2 blue lines. The market dumps down and breaks out before dumping down again. Now remember, we have 10 a.m. major red news. We're not doing anything until after the news is released. So we have our higher time frame levels. We have the high of the current day. We have the high of the previous day, and we have the high of week level. Now here's a question that I often repeat to traders. Are they working the high or are they working the low? Are they working the high or are they working the low? There's the high of week level, and below Monday is our low of week level. They've broken down from the high on Monday. They've dumped down and dumped down again, breaking inter-day levels from sessions, lower lows, lower highs, breaking out of the low of week level, dumping back down into our inside day breakout traders. Now, if traders had their stops on the higher time frames below the inside day, that breakout has not failed, which is why I repeat to traders over and over again, just because a market breaks a daily level and pulls back, that is not a failed breakout. Higher time frames are what we're targeting. We have inside day breakout traders in the market. They have dumped down and they are still above the inside day as the New York session is about to open. This is a 30-minute chart. At 10 a.m., we have a pin hammer. At the close of our 9:30 candle after New York open, 9:59 a.m., we have a pin hammer right before 10 a.m. major red news. Now you'll notice the 9:30 New York open prior to 10 a.m. made a higher high. So New York open and pressed higher, but we're still inside of our daily level ranges. We've already broken out. Now there's 2 scenarios. This market could break down and retest that level, but we're breaking out and pulling back inside of our inside day traders. We have a higher high on Monday that's been dumping down 10 a.m. major red news. We can draw lines on our higher time frame chart. And the simple question, are they working the high or working the low? 1 minute after 10 a.m. major red news is released, our 10 a.m. club traders have the trap and shift buy low setup targeting back to not only the high of the day, but potentially the high of week level. There's nothing complicated. There's not a lot of minutia. There's not a lot of variables. Is it a buy low setup or a sell high setup? Keeping it simple. Breakout, pullback, continuation in the long direction. Day 1, day 2, day 3, two types of trades. We have a breakout, pullback, continuation, and a buy low setup. We're buying at the low of the week level, targeting back to the high of day and potentially the high of week level, which this trade eventually followed through to. Day 1, day 2, day 3. Rinse and repeat, 10 a.m. club. Same thing over and over and over again. Which instrument is offering the setup? The setup. If you're trading your favorite instrument, higher time frame daily signal, signals on the day, broke daily levels, dump, coil, and pump. On the smaller time frame, we have trap and shift, buy low, targeting the high of week level, keeping everything simple, repeatable, and scalable. Markets only do 3 things. There are only 2 setups, buying low and selling high. Markets are either in consolidation or they're in breakouts. Daily signals and signals on the day. Great trade, traders. Congratulations. Free cash Wednesday. Rinse and repeat. Tomorrow is the 2nd trading day in our new month. It's a non-farm payrolls Friday. Keep everything simple. There is nothing complicated. Every single market does the same 3 things. There are only 2 setups. Have a great day, traders. Congratulations. Love you and appreciate you. And may the markets go with you.